Hello, and thank you for taking the time to watch another video. My name is Dan Sharlock, and I am a part of Innovative Wealth Partners. Just wanted to go over a couple of things that I'm seeing right now in the economy that I think clients and anyone who's not a client would be interested in knowing for their own benefit, and just for making solid and smart financial decisions moving forward into the future. Couple topics for today. The first one is interest rates. So as you probably already know, interest rates have came up substantially over the last couple of years. We can currently get Treasury rates. So I'm not going to say this is the safest, but I believe Treasuries, United States Treasuries, to be one of the safer asset classes that exists in the marketplace today. And we can currently get Treasury rates that are significantly higher. Most of these shorter duration ones that I've been purchasing for customers and myself are over 5% currently. The highest I've seen here recently is around 5.4. But that is a huge spike over where they were just a few short years ago. So that is an easy thing for you to take advantage of. You are locking your money up for a certain time frame or time period, but they are very liquid. So you can get out of those before that time period, kind of like you could a CD if you needed to. And if that amount of liquidity is not up your alley, the second option would be to utilize a money market fund, money market account, whatever you want to call it. Those are also extremely, quote unquote, safe in nature, or they're designed to be. The one I like is offered through JP Morgan Chase. It's backed by Treasuries. They invest the money in the Fed's repo window, which is another topic for another time. But that also is yielding over 5% right now. So again, an amazing opportunity to get a very, I think, robust yield on your savings, or maybe on your retirement dollars. I have shifted a lot of my assets into those currently just because of the risks that I see in the marketplace. So it's another good option. The other thing that I'd like to discuss is the price of a barrel of oil. And oil has escalated in price up to over $90 a barrel. That's much higher than it used to be, and I could see that continuing. Obviously, we don't know that for sure, but oil will eventually put a strain on our economy. I'm not exactly sure how much or at what price level, but getting it over 100, maybe close to $120 is something that I think could have an impact on the economy. Definitely will slow things down. The next thing that I think would be worth discussing is the real estate market in China. Back in July, Chinese stats are hard to I guess for me, they're somewhat hard to believe. They're somewhat hard to find. They're very definitely hard to validate or to verify. But my research would lead me to believe that in July, China had an absolute abysmal month in their real estate sector. And I'm sure most of you already know this, but a lot of the Chinese economy is built on real estate. So when we see massive falls in the real estate market in China, I believe that will have a little bit wider impact than maybe what we would have anticipated in the past. So that is another factor that I feel like will weigh on global markets, not just China. So just like when our market fell substantially because of the 08-09 real estate debacle, and that was a global event, I could see other real estate markets having impacts outside of just the local economy that they're occurring in. We already have multiple other countries that are admittedly in a recession. Germany is one of the bigger players in the world that would fall into that category. So that is another factor to consider. And again, we are in a more unified environment right now than maybe what we've been in the past. So keeping that in mind would be good. The yield curve would be another one. So yields, obviously, we talked about rates, but the yield curve is still massively inverted, right? So that means that long-term rates are substantially different than short-term rates, lower than short-term rates, which is just not how it should be normally, and it's not how it's been at most times in the past. And I think that almost every time this has happened in the past 50, 60 years, we have experienced at some point after that inversion a recession, right? It's not a guaranteed thing, obviously, but it has been very consistent in the past as a good indicator for when a recession would occur. And I don't think that things are that much different now than what they've been in the past. So the yield curve will or could have a fairly substantial impact on things. The other couple of things revolve around increased or changes in payments or benefits that are received today. One of the bigger ones is the fact that student loan payments are going to be coming back or are now back. And I believe that will have an impact on the economy. I've heard that affects roughly 30 million individuals, and the average monthly payment on student loan debt, and this is an average. I don't have a real exact figure on this, but I've heard that the stats are around $400 a month. So, 30 million people, $400 per month. That isn't chump change. That for that demographic of our society, that is a substantial amount of money. And I think that $400 a month has to come from somewhere. In other words, it will come most likely out of some other form of spending. So that will have a big impact on things, potentially. Not sure exactly how big. And then the other thing that is an issue that we could face over the years, or over the next months, is there are some welfare programs, specifically SNAP programs, that are changing. So some of the programs are being reduced, some of them are being eliminated. This isn't something I study and watch on a day-by-day basis, or even really ever, but it is something that is changing, and it will impact the consumer's discretionary income, right? So they're going to have less monthly money coming in. So what monthly money they are bringing in will have to be utilized more efficiently. So in my opinion, that means maybe less consumption on I would say frivolous consumer goods, and maybe more consumption of, or redirecting that consumption into the more important things, food and energy. Those are the biggest things, and you combine that with our interest rate policy that we're on. We are currently sitting in an environment right now where housing loans are roughly 8-ish%. So between, it just depends on your area and your broker and your bank and your history with them. But let's just oversimplify and say current rates for a 30-year fixed mortgage are in between 8 and 9%. That isn't the end of the world, but it is substantially higher than what people have grown accustomed to over the course of the last 5 to 10 years. And it definitely impacts your monthly payment by a significant degree. And in my area, we haven't seen a huge falling in our real estate market, but I've heard that that's already happening in certain real estate markets. And we all know that COVID changed a lot, and that is going to have an impact eventually on commercial real estate. My industry, I believe, is still one of those that is quasi back in the office. but I oftentimes get a call or make a call to a vendor and hear a child in the background. I think that's a great thing that people can work from home. However, I don't think that child is in their office. So my experience is that I wouldn't say most, but a lot of my industry is not back to the office, which my industry is good at not wasting money most times. So if they see office space that isn't being utilized, I think that office space will eventually go away and not be paid for, which on a global or on a national level, that's going to have pretty wide-reaching impacts, in my opinion, on the entire real estate sector, but specifically office and commercial real estate. So those are just some things that I feel like would be good for us to watch over time and continue to add to the list of things that we're monitoring. I don't think any of them are, require urgent action that you need to take, but just being aware and being knowledgeable as to what's going on and the opportunities that exist is never a bad idea. So if you have any questions, reach out to me. Thanks for watching.